in order for your business to succeed, in order to be a successful businessman, you have to make sure that you understand the psychology, the needs of your customers who are not as privileged as you. If you look at the top successful businessmen, so a major chunk of their customers are, normal people who come from very humble and, economically maybe they are not coming from very privileged background.
So now IIM is a dream to many. So how do you got this route of getting into IIM?
See, when we are talking about the route to IIM, so there are basically two conventional, programs that are there.
Okay.
So, this is just my personal opinion that the MBA program, it's very difficult to get in.
Correct.
And for the PhD program, it's very difficult to get out.
Hello everyone. Welcome to another episode of You, Me and Finance. You, Me and Finance is an initiative by Pickright. We have somebody very, very interesting for the show. We have always been getting somebody from the field of finance who has been working with finance. Now we have got somebody who has done a PhD in finance. So welcome to the show, Mr. Pratik Jain.
Thank you so much, Ashish.
Welcome, Pratik. So today's episode is going to be a little different. We are not only going to talk about finance, we'll be also talking about how do somebody can prepare for his PhD, how do somebody can also take more interest into finance. So these are the things that we'll be discussing more in this episode. So welcome, Pratik, again to our You, Me and Finance episode. And firstly, congratulations for your PhD from IIM Bangalore.
Yeah, thank you so much. And thank you for inviting me and look forward to our discussion today.
Okay, thank you. It was also nice connecting with you, Pratik. So, Pratik, our team has actually been in touch with you and they have come to know about some of the quotes about yourself, wherein you are talking about how hard times create a very good human being, and at the same time, a weak man can create a very hard time for somebody to survive. So, on this context, can you tell me some examples and what are the things that you are having your findings in your past?
So I think the quote you are referring to is that, hard times create strong men and, good times create weak men. So that is the quote. And I think I am a big believer in that saying. Because what happens is that, coming from a business school and also from a business family, in terms of, my father has been a businessman who has started from scratch. And also, growing up in let's say, a smaller city. I am someone who was born and brought up in Rewari, which is in Haryana. So I think I won't say that I was not privileged. So definitely, I had good schooling and all. But also, looking at everyday struggles. So, as basic as traveling in a roadways bus or, traveling in a passenger train. So I think if you look at all the big businessmen, so for example, we can take examples of big companies, for example, Amazon, or, big banks like SBI, or, big fintech companies like Paytm. So all of these companies, if you look at the top successful businessmen, so a major chunk of their customers are, normal people who come from very humble and, economically maybe they are not coming from very privileged backgrounds.
Correct.
And in order for your business to succeed, in order to be a successful businessman, you have to make sure that you understand the psychology, the needs of your customers who are not as privileged as you. So I think it is very important that in order to be even in order to be successful businessmen, we should be grounded. We should know about everyday struggles. Every once in a while, we should try to travel from public transport and not just rely on private cars or cabs. And that gives a huge understanding of what are the needs of the market. So what are the struggles that people are facing,
Correct.
and also, yeah.
So in this context now, what I wanted to know more about you is, let's say when we say is a weak man, so whom do we call as a weak man?
So I think I wouldn't call
Or it
yeah.
could be a
So
weak man or a weak decision.
I think when we are saying strong men versus weak men, so I think what we are primarily referring to is someone, so for example, weak men, we can say that, uh, let's say someone who is not able to adapt to the changing economic conditions. So for example, let's say right now, let's say I want to, I have been given a business which has been passed on to my father, let's say, just for an example.
Correct.
So let's say my father, who was, who built the business from scratch, he had a very good understanding of the customers, of the market, of the industry. And suddenly, what happens is, since I was born and brought up, or since another person was born and brought up into a very privileged family with a very, elite schooling and all. So what I would call a weak man is that, you are not able to take the business to its full potential once you take charge of that business,
Okay.
right? And secondly is also that in terms of skill. So for example, you have to continuously evolve. So let's say we are talking about AI and all these technologies right now that are coming up. So it's
Okay.
very important that you keep on upskilling. So you keep on, you have your one you have your feet grounded in you have your feet on the ground, and you know what skills might be required in order to for you to become a successful businessman or a successful professional, be it in any field. So I
Okay.
think I would define weak men like that. So who are not able to adapt changing economic conditions.
Okay. And say, let's say when we talk about men, we should also talk about times. Like you said, okay, good times and problematic times or whatever, weak times.
Exactly.
So
Yeah.
how do we define that?
So I think how I would define it is, let's say, so there are good times and bad times. So for example, I would say, see, it's a very existential question and it's easy to talk about it. So for example, I would say that we hear so many stories about, people coming from very humble background in, let's say, Bihar, who have,
Hmm.
son of a rickshaw puller who has cleared UPSC exam. So I
Okay.
think that's how we define. So that's how we say that those were very, bad times. So the situation of the family or the condition of the family was not good, and that motivates a person, to realize their full potential, to come out of that phase. So maybe they started with not so, good background in terms of finances and economy, but they go on to become successful.
So if we summarize, we can call it as okay, people who are tough in their mind to adopt to changes could be a strong person, and they are the person who can take decisions on different situations or different possibilities. They have ability to evaluate what are the different kind of outcomes they can get on different situations, which will define their future. Probably
Yeah.
we can think this way, or if you have anything else in your mind, you can also tell.
No, I think you summed it up pretty nicely. And just because we are talking on a finance podcast, so I think one of the ways we can also relate the same to a finance podcast, or in terms of investing. So is that, let's say I am an investor, I want to look at companies, right? So if I don't have a good understanding of what kind of market is there, what is the psychology of customers. So let's say even if I have to select four stocks which I want to invest in, so just in order to evaluate them, so how is the company doing? Uh, so I need a very good understanding of the market. So when we talk about, let's say, DCF reports, so discounted cash flow analysis, or even valuation, so that is a major portion of the. So my whole valuation phenomena or the valuation fundamentals are dependent on our understanding of how the company will grow,
Okay.
and the growth of the company itself is dependent on its customer base and how it is evolving over time.
So now coming to one more thing, let's say we have a lot of viewers who are aspiring to get into PhD, or they do not have a real career path. So most of the time people struggle because they do not have a proper path. How do they take on their career? So I would like to know from you that how, first of all, you have decided that I should do a PhD and this should be my topic.
So just to give you a brief about my background, so I've done my engineering from NSIT Delhi, which was back in 2016, so almost a decade ago,
Okay.
or I think 8 years ago. And after that, I worked for 2 years in data analytics. So I
Okay.
did not have, too much background into finance. So for at least formal background into finance. But I think one of the core skills required to be in the finance industry itself is good analytical skills and good understanding of, let's say, numbers and math. So basically you have to be good with numbers. So I think being from engineering background certainly helped, I think, if not totally, but at least it gave a good uh, platform for me to build upon that finance career. Secondly, I think I was interested in
I'll interrupt here, but how do you thought of
sure,
finance?
yeah. So I think when I started my professional journey after my engineering, so there is a lot of I wouldn't say pressure, but there is a lot of excitement about, whenever you file a income tax return or anything. So how do you make your investments? So be it
Okay.
in Section 80C or, any other, you invest in mutual funds. So I was always left confused that, how do I, so what kind of stocks are right for me? So what kind of mutual funds are right for me? So when we talk about risk, so risk is a big thing in finance. So, I mean, two or three of the big things in finance are, let's say, risk, return, and liquidity. So whenever we talk about, let's say, risk, so how do we measure risk? So
Okay.
those are the questions, that I kind of struggled with. So people always used to say that, you should research before investing. So when we look at the mutual fund ads, so they'll say that security markets are subject to,
Mhm.
market risk. So that intrigued me. So I tried to read something, on the internet, on YouTube. So maybe back, maybe 8 years back, it was not so the let's say the content was not as much freely available as it is now, because a
Okay.
lot of content creators have come up. But I think all these questions, they intrigue me. So I was looking for an MBA path also, which is the more traditional path. And I came to know that, there is a
Okay.
FPM course, which is the fellowship program in management. So these were the two choices. So I cleared the finance program.
So, Pratik, I wanted to know, okay, how do as a new individual or as a veteran in finance, I can take up PhD. So, in case somebody want to take up PhD, what are the steps that he has to take up?
Okay. So I think if somebody has decided, so if he has made an informed decision to, go for a PhD, so the usual path is, so for example, there are state universities, there are central universities, then there are IITs, and then there are IIMs. So let's say
Okay.
when we are talking about finance specifically, all these different types of universities, they have different channels through which you can go for the PhD program. Most of them, want a score, competitive exam score that you have to get. So for example, in most of the cases, it is the net GRF
Okay.
you have to clear. For example, people with commerce background or people with BBA background. So if you have a 3 year bachelor degree, then you have to do a master's, and then you can go for a PhD next. And if you have a 4 year bachelor's, so for example, in engineering or a 4 year undergraduate, then you can directly apply for the PhD program. And
Okay.
IIMs have a benefit that they take other exams also apart from NET GRF, which are, for example, some IIMs have their own exam, like IIM Bangalore have their own exam. And apart from that, GRE, GMAT, CAT, all these exams are also considered by institutes like IIMs, ISB, and all that.
So, if you have any write up on this, that like what are the steps somebody can follow, if you can share with us, we'll definitely try to pin it to the video so that people can know more about it.
Absolutely, absolutely. I'll make sure I'll share that.
So now IIM is a dream to many. So how do you got this route of getting into IIM? How exciting it is, or how easy or difficult it is?
Yeah. So I would say, see, when we are talking about the route to IIM, so there are basically two conventional, programs that are there. So one is the MBA program, which
Okay,
IIMs are, very well known for,
correct.
and second is the PhD program.
Okay,
So, this is just my personal opinion that the MBA program, it's very difficult to get in,
correct.
and for the
Competition
PhD
is very high.
yeah, and for the PhD program, it's very difficult to get out. So even when we talk about the PhD program, so I think in terms of when we are talking about MBA, the number of seats are too many.
Mhm.
Let's say on an average, every IIM it admits around 500 to 600 MBAs every year. So that is just the 2 year program. But when we are talking about the PhD program, so I think the annual batch size is about 20 students,
Okay,
and that is across different programs. So, for example, in the finance program, each IIM will take only about maximum of two, three, four students.
okay.
So that makes it very competitive. But yeah, so let's say the only difference, or the major difference that I would say between the PhD program and the MBA program is that in an MBA program you get to learn many things across many subjects. So, for example, you learn about HR, you learn about finance, operations, marketing, economics. So all these subjects you will get to study in I would say a little lesser detail, but
Mhm.
you'll become knowledgeable across many fields. When we are talking about the PhD program, you just get to study finance for 5 years.
Okay.
So that makes it very interesting that you can become an expert in that field. You can get to explore. For example, my area of research is mutual funds. So for three and a half years after my coursework, I only did research on mutual funds, and then you realize how vast the field of mutual funds is it's in itself.
Okay.
So
Pratik, if I put the question in this way, let's say I'll be doing a PhD on a particular subject for the 5 years. I do not do anything else. Will not it be boring?
uh, so I think it depends. So first of all, when we are talking about the PhD program, it is structured in such a way that first 2 years is the coursework. So
Okay.
just for example, we do any master's degree. So there is a PhD specific research focused coursework that you have to go through.
Okay.
And it's very competitive. It's very demanding. So, I mean, you have to do so much hard work that, you barely have any time to get bored.
Okay.
And after the coursework, you have a qualified exams, after which you start your thesis. And I think coming back to your question, so I think in a way you are right, that, spending a lot of time on a particular question or a particular topic can be a bit boring, but I would say that that is a decision. So for example, even before getting into the PhD program,
Okay.
you have to make that informed decision. You talk to people about what the program is all about. You have to be really interested in research, which you will realize in the first 2 years. So there is a lot of training that happens in the first 2 years, and
Mhm.
after that, yes, so it's a difficult and long journey, and people do struggle in between. But I think there is a lot of support also, and if somebody is really interested in research, so I think it's a very interesting and it's a very fruitful program, I would say.
So how do you come up with your topic, or what was your topic?
So I think it's a great question. So because you are known for your in your PhD, so your topic is everything you are known by. So
Correct.
what are you working on? You spend a considerable time on it. So narrowing down to your thesis, or narrowing down to the topic of your thesis is a I would say an iterative process, in the sense that, for example, there are a lot of professors in IIMs. So let's say within the finance area, there might be some 10 or 12 professors that are working, right?
Okay.
And each of them will have their own expertise. So whenever you are doing a PhD, you have to do it under a supervisor. And
Okay.
in the first 2 years during the coursework, you try to work with as many professors as you can, and try to find out what what suits you, what topic interests you. So you have to basically, it's a hit and trial process. So maybe you'll work on 4 topics, and you will say, okay, these are the 2 topics that I'm interested in. And
Okay.
also, there are different personalities. So for example, you might work in one way, and some professor might work in another way. So it's also about the equation between a student and a professor. So there are 2 things. So one is the topic. So there should be a mutual agreement between on the topic between the student and the professor, and also the style of working of the student and the professor should also match. And based on that, there are some discussions. There is some to and forth. You have to see what are the things that have not been worked upon in the past, and accordingly you try to find some newer question which has not been studied, and then you finalize the topic of your thesis.
So what was your final outcome? What was
Okay.
your findings?
Yeah. So just to give the audience a background about what was my thesis all about. So it was about evaluating the performance of mutual funds in India. So I was majorly looking at the equity mutual funds in India, and how basically the active mutual funds in India, how have they performed with respect to the passive index funds.
Okay.
And this is a question, you will see Warren Buffett talking about it in different podcasts, whether you should invest in index funds, whether you should invest in actively managed funds. And why is this important is because you have to pay the mutual fund houses a certain fee when you invest in active funds. And
Okay.
the fee to invest in passive index funds is very less.
Okay.
So if you're paying for something, you would expect that you will get higher returns,
Hmm.
right? So
Obvious.
yeah, but big investors like Warren Buffett and all, they have come to the conclusion many a times that passive index funds, they are better in terms of performance, and there is no value addition in terms of active funds. So that question has been explored in greater detail in the US markets. But in terms of India, the history of mutual funds is very recent. I would say around 10, 15, 20 years. And such questions have not been explored in greater detail. So what I did was I explored this question. So how do active funds in India perform with respect to passive mutual funds? And my findings were majorly that on average, if you see all the actives, so there were about 250 equity mutual funds in my sample, and on average I found that both are at par. So active funds do not
So
outrightly
if you
outperform.
tell what are the cycle of your study,
Yeah.
then probably people can correlate it to Nifty or the market movement. Let's say if you have taken the historical data of, let's say, 2000 to 2015, or what was the range that you have taken into consideration?
Okay. So my period of study was 1995. So that's where the initial data was captured. So one or two, or I think very few mutual funds. I think around not one or two, but I think around 30 or 40 mutual funds did exist at that time. So it had started. So from 1995 up until about 2021-22. So
Okay.
around a 25-26 year sample I had. And
Okay.
in that sample, there were total of 250, around 250 to 51 mutual funds were there in my sample. And on average, I found that active funds do not outrightly outperform the passive index funds, which is a cause for concern because we see that
You pay
SEBI
high fee and you do not get the returns.
exactly. But if we go into greater detail, we do found that we did find that there are different categories of mutual funds. For example, there are large cap funds, there are small cap funds, then there are ELSS funds which you can use to basically do your investment and tax saving. So there are different types of funds, dividend yield, sectoral funds. So it's the same is not the case everywhere. So I did find that some categories of funds they do outperform the benchmarks, and some categories of funds they do not outperform the benchmarks. And that's where the SEBI disclaimer comes that you should investors should properly do their research before investing. So it's
Correct.
very important to look at historical returns, historical
And
performance.
I have also found from my experience that it is quite cyclical. Let's say okay, for last 1.5 years, I have seen mutual funds in small cap category. They have not outperformed small cap or BSE small cap index. Many of them has at par or underperformed BSE small cap index, wherein they might have outperformed Nifty 50. So, you have any instances happening in your research on category basis, like maybe a balance fund was not doing good, or any new kind of category that you found out that it could be a better option compared to going for a pure active or pure equity fund? Like you have different mutual fund categories.
Okay, so that's a very good question. So first of all, so coming to your first part of the question, so maybe small cap funds would not outperform the like you're saying. So maybe BSC small cap index, but you can see that they will outperform the Nifty 50 index, right? So now it's very important to see the benchmark. So what we are talking about is two different benchmarks on which we are evaluating the same fund and the appropriate. So I did this exact analysis in my thesis, and I found that it's very important to choose benchmarks carefully because there is a lot of gaming around these benchmarks that might happen. So investors should be careful. Why is it important to choose benchmarks carefully? Is that Nifty, when we are talking about Nifty 50, it is composed of the top 50 companies in the Indian equity market, and
Correct.
those are very safe companies. Those are the blue chip companies, right? So the risk will naturally be lower in those companies. So what happens is when so in finance, I think you would know that it's all about risk return equation. So when
Correct.
the risk is lower, the returns will also be lower. If we are taking Nifty 50 to compare to a small cap mutual fund, so then what we are doing is comparing a low risk product to a high risk product, and
Hmm.
then obviously it will show as outperforming. But
Correct.
when we are taking two products, the benchmark and the mutual fund are of the same risk profile, then it makes sense to compare them on the basis of return. So it's very
Most of the
important that
time in India, I have realized that if you go and talk to people about why don't you invest in a fund without knowing their benchmarking, without knowing their category, they'll say that why should I invest in large cap? I should invest in this particular small cap fund. This has given 60% return, wherein
Mhm.
the other fund has given only 15% return. So that is the major misconception among investors in India today, that they compare all equity mutual fund as only one category and one kind of risk, wherein the risks are actually different depending upon the category.
Absolutely. So I think the major point here is that we should not just see at the return. We should also look at the risk-adjusted return. So, for example, the most common metric to look at the risk-adjusted return is the Sharpe ratio. So
Okay.
people should look at the Sharpe ratio, and they should look at the benchmark. So, for example, I think, see, when we are looking at investing in, let's say, large cap equity fund or small cap equity fund, these are two very different products with different risk profiles. What would happen is, let's say I have to go for a higher education in 1 year, or there are parents who have to get their child or children married in 1 or 2 years. What would happen is that they cannot take too much risk.
Hmm.
They have to look for a safer product so their wealth does not get eroded with market.
Correct.
So for example, during COVID times, we saw that the entire market came down, right, during one of the days when the COVID was
At
happening.
the peak initial COVID period, first COVID.
Yeah, exactly. But if we are looking at some riskier products, they will come down even faster. So, for example, Bitcoin as a product is very different from, let's say, a blue chip mutual fund. So
Correct.
we have to be very careful about what life stage, what age bracket do we fall in, and what are our goals. So, for example, my goal can be to go for a higher education in next 6 months, and I cannot invest my capital in a Bitcoin, because then suddenly the market goes down and I might have to defer my education plans.
One more point which I have always come across with investors saying that, or I also firmly believe that most of the time investors now downplay asset allocation. They do not focus on asset allocation. So what was your findings, or is there any findings on asset allocation on your PhD?
Yeah. So, for example, that's a good point. That people often tend to, I would say, underestimate asset allocation. For example, people will say that I will not invest in fixed deposits because it's a very low return product, and I am a very risky, or let's say I am a very ambitious investor. I know that mutual funds they provide, or stocks they provide 20% return. Why should I invest in FD which gives 6% return?
Correct.
So that is the usual conception. And similar is the case. So, for example, when we are talking about asset allocation, we are talking about asset allocation across various asset classes. So, for example, equity, fixed income, which are bonds, then fixed deposits, and let's say commodities or derivatives, whatever. So, what I found is that if you look at mathematics, so just a few minutes ago we were talking about risk. So, what happens is that as investors, we are not very well versed with different analytics. So we do not have a very clear idea about the risk. And
Okay.
what this asset allocation does is it diversifies our portfolio, so that let's say the stock market goes down, then maybe commodities market or gold or bond market will not go down. And what it does is it makes our portfolio very robust, and it our portfolio becomes volatility proof. That whenever the market is very volatile, maybe the portfolio will not go down as quickly. The flip side of it is that we'll not get maybe as high returns. So basically, the whole idea about investing across different asset classes is that you don't just have to look at risk and return. You have to again look at the risk adjusted returns.
Okay.
And for an investor who is just investing in stocks, maybe the returns are high, but if you invest some of the amount in, let's say, other asset classes, for example, bonds and fixed deposits, your risk adjusted return and Sharpe ratio will become even higher. If you allocate your capital properly, you do proper portfolio optimization, you can achieve even higher risk adjusted return.
So, Pratik, my point was, I have seen that there will be a lot of investors who has gained some knowledge on the stock, and they feel that they have become pro, and now it is not important for them to invest into stocks or into mutual funds, and they can survive only by investing into stocks. So, how good or how bad is this notion of investing?
Right. So I think, see, it also depends on the risk appetite of the person, but I can give a general opinion on this.
Yeah.
So what happens is that, see, whenever we are investing in a individual stock,
Hmm.
so there are two or three things that happen. First is that you're not able to diversify properly,
Correct.
because our knowledge, see, there are around 5 6,000 stocks, I think, at least in thousands.
Yeah.
Yeah. for at least 4 to 6 thousand stocks that are currently there in the Indian stock market. And it's very difficult for a normal investor to, gather all that data and to analyze which stocks are good, what is the industry outlook of each of the stock, what is the financial condition of each of the company. So it's very difficult to do that. Let's say you have gathered some data on 3 or 4 companies, so you can go ahead and invest in those companies, but still you will not be able to diversify to the full extent,
Okay.
right? So let's say you have only 2000 rupees, and I will say that let's say there are some stocks which are one stock is of 5000 rupees. So how can you even invest in that stock? Because you have to at least buy one stock to get invested in that particular company, right? So what mutual fund does is that it will you can just invest 500 rupees, and those 500 rupees will give you some fractional ownership in many of the companies, and you can diversify even with a small capital. So that is one of the major benefits. And because mutual funds are managed by professional fund managers, so they know when to buy, when to sell. So what are the risk, how to
This
mitigate
is
risk?
what I also feel, that buying a stock is not a bigger challenge. You can
Yeah,
get to know about it from different sources and buy it. But the challenge here is whether to hold or whether to exit, or
right.
whether to add more to the particular stock is a challenge, which a fund manager with its expertise can do better compared to a normal individual.
So yeah, absolutely. So I think this is the expertise that fund managers. I wouldn't say they might, that fund managers know everything, but still they are tracking the market on a daily basis, on a hourly basis, on a minute-to-minute basis, and they can track the market. So that is what they do for a living. As compared to a normal investor, we have our day jobs. So, for example, we might be in the office, we might be in the middle of a meeting, and suddenly we know that okay, the market has crashed 3%. So it's very difficult, to be there, to be trading all the time when you're not a full-time trader. So I think that ways it's very important. And also, I mean, unless we have a complete understanding of the risk, that is very difficult to so because professional fund managers have that understanding that what is the risk profile and all. And so I think there is a lot of value in investing in mutual funds, not just for beginners but also for experienced people. So we should not be too overconfident. So we should always try to maintain some allocation across stocks and mutual funds.
So, actually, we have exceeded the time, but only one last question that I want to ask, which you can just complete at a very short note. It is about how do I plan my allocation depending upon my risk and the life stage I am in.
Okay, so yeah, so great question. So let's say you have asked two things, right? So one is risk, and other is the phase of life or the age bracket that we are in. So I think in terms of risk, we I think briefly touched upon it a while ago.
Correct.
Is that in terms of risk, when we talk about risk, so there are two or three things. So what is the type of risk profile that you have? So for example, there are some people who track, let's say you invest 500 rupees in a stock, and we are not able to sleep well because we are very worried that what happened to my 500 rupees or even 5000 rupees. So maybe one day it will be 450, another day it will be 520, and that depends on person to person. But I think that is what we call in finance as risk aversion, or
Okay.
how much risk appetite do you have. So if you are someone who likes to enjoy a constant return, then
Okay.
you should maybe go for a less riskier asset class. So maybe short-term bonds, I mean mutual funds that are short-term in nature, or maybe blue chip funds, because those are less risky. Those companies are less volatile, and as a result, the resulting mutual fund is also less volatile. So that is one. So you have to know that what is your risk appetite, and accordingly you have to choose a mutual fund. Second is you have to look at your goals. So which stage of the life you are in. So for example, like I said previously, that maybe you want to marry in next 2 years. Maybe you want to go for a higher education degree in US. So that requires money.
Correct.
And then you can't be investing your money in a very high risk. let's say a small cap mutual fund, because that will be ultimately too risky, right? So, or maybe let's say you have just started your career, you have 20 lakh rupees in your bank account, and you do not have any, forthcoming events, milestones in your life. Then I would say that it does not make sense that you invest all of your money in a safe fixed deposit. Then, because you have your entire life ahead of you, you can maybe invest a portion of your money. You can allocate the capital properly and invest a significant portion in small cap funds, because your investment will grow by a greater pace. It will be more risky, but it will also give more return.
Fine. Yeah, I think people would get really some good insight. I really wanted to continue this discussion further. In case in future we get some time, then we'll have one more session on this, because now I can see that there will be a lot of questions which are coming up in my mind, which I can ask you, but we have a limitation of time. But certainly I'll come back to you for one more similar kind of session wherein we can added to many more queries or many more requirements of the investors. So thank you, Pratik, for the time, and it was wonderful having you on the show. Thank you.
Thank you,
And
Ashish, so much. And for me, it was also a great experience, just to uh, give my insights on some, real life problems, real life topics. So I think that is always wonderful. So thank you for having me.
thank you. Thank you, Pratik, and thank you everyone for watching. Please do subscribe to Pickright's channel, and do come watch out for all our different series of videos which will be on this financial learning. Thank you for watching. Bye.
Thank you.
So, Pratik, I'm stopping the record now.